Hello everyone, welcome to the market opening bell for Friday, January 23rd, your 10-minute guide to the stock market. US President Trump has claimed that a framework agreement has been reached with NATO on Greenland, boosting overseas markets. Hong Kong stocks rose in response. The Hang Seng Index opened 165 points higher and climbed as much as 194 points early on to 26,779 before reversing and dipping 85 points to 26,499. It closed the day up 44 points or 0.2% at 26,629. The Share Index fell 8 points or 0.1% to 9,114, while the Hang Seng Tech Index gained 16 points or 0.3% to 5,762. Total market turnover was $234.8 billion. Southbound funds recorded a net inflow of $5.239 billion, with the largest net buys into Alibaba at $1.413 billion, Sino at $592 million, Kuaishou at $479 million, China Life at $445 million, Portmart at $374 million, and Xiaomi at $447 million. Net outflows were seen in China Mobile at $874 million, Tencent at $669 million, and Horizon Robotics at $121 million. Technically, the Hang Seng Index filled the downside gap from Monday between 26,741 and 26,715, but closed below the 10-day moving average at 26,672. In the near term, it's expected to continue consolidating between 26,300 and 26,800. Mainland Asia's opened higher but retreated in the morning before gradually recovering in the afternoon. The Shanghai Composite Index closed up 5 points or 0.1% at 4,122. The Shenzhen Component Index rose 71 points or 0.5% to 14,327. And the Chinex Index gained 33 points or 1% to 3,328. Total turnover in Shanghai and Shenzhen reached 2.68 trillion yuan. The renminbi central parity against the US dollar was lowered by 5 points to 7.0019. The National Bureau of Statistics reported that the urban unemployment rate for the 16 to 24 age group fell to 16.5% in December, the lowest in 6 months, down from 16.9% previously. The nationwide urban surveyed unemployment rate held steady at 5.1% month on month, with the full year rate at 5.2%. Overseas memory chip stocks surged, with Japanese chip dicing equipment maker Disco hitting the daily limit. Chip equipment stock ASMPT jumped 6.3% to close at $108.2. Baidu rose 4.1% to $160, hitting its highest level since February 2023. The company officially released the full version of its ERNIE 5.0 large language model, which features native multimodal modeling with 2.4 trillion parameters and supports text, image, audio, and video understanding and generation. ERNIE 5.0 is now available on the Tianfan platform and has been integrated into products including ERNIE Bot, Baidu Huibo, Xing, and ERNIE Assistant. Alibaba gained 1% to close at $164.8. Its enterprise-grade intelligent mobile office platform, DingTalk, launched version 8.2.5, partnering with AMAP and Alipay to introduce the AI Truffle product. Small and medium enterprises with fewer than 500 employees can activate it for free with no upfront costs. The service covers flights, hotels, trains, and ride-hailing, with direct connections to hotel groups such as Jinjiang and Home Inn for real-time AI price comparison and the lowest rates. The seamless reimbursement ride-hailing feature, co-developed with AMAP, automatically links electronic invoices to approvals upon trip completion with Alipay corporate codes, handling payment without advance funding. Managers can set custom travel policies, and the system generates detailed reports and rankings by department and employee for full visibility and control. Coal stocks performed strongly since the start of 2025. The sector had been weighed down by falling coal prices, but pessimism eased significantly after document number 108 circulated. Supply-side tightening has now become the key investment theme for coal, with the previous oversupply situation expected to reverse. As capacity constraints continue into 2026, restrictions on imported coal could also emerge. The anti-involution trend remains intact, and if prices stay elevated for a prolonged period, there is still room for earnings recovery in 2026. MicroPort Medical issued a profit warning, expecting net profit of no less than $20 million for 2025, compared with a net loss of $268 million the previous year. The turnaround is mainly driven by continued revenue growth, particularly from overseas operations, contributing around 70% high growth. Gross margin improvement of 2 to 3 percentage points from cost optimization, a roughly 10 to 11% reduction in operating expenses, and positive gains from subsidiary disposals. Geopolitical concerns eased and U.S. inflation data met expectations, allowing U.S. stocks to extend their rally. The VIX fear gauge dropped 1.26 points or 7.5% to 15.64. The Dow rose as much as 530 points to 49,607 before closing up 306 points or 0.6% at 49,384. The Nasdaq gained 211 points or 0.9% to 23,436, and the S&P 500 added 37 points or 0.6% to 6,913. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, rose 122 points or 1.6% to 7,899. Big tech stocks advanced, led by Meta, up 5.7%, and Tesla, up 4.2%. Tesla CEO Elon Musk said driverless taxis would be widely available in the US by year-end, despite repeated delays to full self-driving cars, and that the Optimus humanoid robot could go on sale to the public as early as the end of next year. Amazon and Microsoft rose more than 1%, while Alphabet, Apple, and Nvidia gained less than 1%. Nvidia CEO Jensen Huang stated that Nvidia has overtaken Apple as TSMC's largest customer. Reports earlier suggested TSMC is adjusting its supply relationship with Apple, no longer prioritizing it for cutting-edge process capacity. Intel reported after Thursday's close a widened fourth quarter net loss of $600 million or 12 cents per diluted share. Adjusted EPS was 15 cents, beating the expected 8 cents. Revenue fell 4% year-on-year to $13.7 billion, above the forecast for $13.4 billion. Foundry revenue grew 4% to $4.5 billion, while product revenue dipped 1% to $12.9 billion. Data center and AI revenue rose 9% to $4.7 billion. For the first quarter, Intel guided revenue of $11.7 to $12.7 billion and adjusted earnings per share of break-even, below consensus expectations of $0.5 per share and $12.51 billion in revenue. The stock fell more than 10% in after-hours trading. Abbott posted fourth quarter revenue of $11.5 billion, missing the expected $11.8 billion. Adjusted earnings per share of $1.5 met estimates. Nutrition sales were only $1.9 billion, well below the $2.19 billion forecast. The company cited rising production costs leading to higher infant formula prices, negative consumer reaction, and subsequent promotions and discounts. Medical devices, its largest revenue source, including diabetes-related continuous glucose monitoring recorded sales of $5.67 billion, in line with expectations. First quarter adjusted earnings per share guidance of $1.12 to $1.18 fell short of the consensus $1.19. U.S. third quarter GDP growth was revised up to an annualized 4.4%, slightly above the initial 4.3% estimate and the strongest since Q3 2023. U.S. personal income rose 0.3% month-on-month in November, slightly below the expected 0.4% and following October's 0.1%, the sixth consecutive monthly increase. Disposable personal income also grew 0.3%, faster than October's 0.1%. Personal consumption expenditures rose 0.5%, matching the prior months and expectations. The PCE price index rose 0.2% month-on-month as forecast. Goods prices increased 0.2%, rebounding from October's 0.1%, while services price growth slowed to 0.2%. Core CPE excluding food and energy also rose 0.2%. Food prices were flat, while energy goods and services jumped 1.9%, reversing October's 0.7% drop. Year-on-year headline PCE inflation accelerated from 2.7% to 2.8% as expected, and core CPE edged up from 2.7% to 2.8%. For the week ending January 17th, seasonally, adjusted initial jobless claims rose by 1,000 to 200,000, far below the expected increase to 212,000. With November U.S. inflation in line with forecasts, markets are assessing the Fed's rate cut path. Spot gold hit a record high of $4,939.41 per ounce, and spot silver reached a new peak of $96.5959, easing geopolitical risks sent oil prices down around 2%. Our stock pick today is China Tobacco International Hong Kong, stock code 6055. While consolidating its core businesses, China Tobacco International Hong Kong is actively deepening strategic cooperation with domestic cigar enterprises, accelerating efforts to promote Chinese-made cigars overseas, enhancing the global brand influence of domestic cigars, and cultivating new growth drivers. The group's strategy is to integrate premium domestic cigar brands and build a unified global image for Chinese-style cigars. The group is actively expanding its cigar business beyond its existing duty-free markets in Thailand, Singapore, Hong Kong, and Macau into other overseas markets. For example, it has already opened flagship stores for Great Wall and Yellow Crane Tower cigars in Cambodia. From July to November 2025, the group successively signed exclusive global distribution agreements for cigars with Sichuan Tobacco, Hubei Tobacco, Shandong Tobacco, and Anhui Tobacco. Through deep resource integration, it brought the four major premium domestic cigar brands, Great Wall, Yellow Crane Tower, Taishan, and Crown under its umbrella, forming a Chinese cigar overseas fleet that covers global markets. China's domestic cigar market has developed rapidly in recent years, maintaining an annual growth rate of over 20%, far exceeding the tobacco industry's average growth level of around 10%. Although the global cigar market declined in 2023, the Chinese market bucked the trend and rose strongly, with sales volume jumping to second place globally behind only the United States. However, Chinese-style cigars still face many challenges in the global landscape, including limited international brand recognition and fragmented overseas channel development, issues that urgently need to be addressed. Over the years, Sichuan Tobacco, Hubei Tobacco, Shandong Tobacco, and Anhui Tobacco, the four core forces in China's cigar manufacturing, have worked together to build a complete and advanced core production and R&D system for Chinese-style cigars through the exclusive distribution agreements. China Tobacco Hong Kong is well positioned to push domestic cigar plants onto the global stage. The core businesses of China Tobacco Hong Kong include the import and export of tobacco leaf products, the export of cigarettes, export of new tobacco products, and its Brazil operations. The group adheres to an external expansion and internal growth development strategy, pooling industry resources, actively identifying potential market opportunities, and continuously enhancing core competitiveness. At the same time, it continues to strengthen supply chain resilience, proactively addressing fluctuations in international tobacco leaf supply, improving the stability of premium imported tobacco leaf supply, and its ability to allocate international tobacco resources, and continuously optimizing product pricing strategies to further boost the profitability of its tobacco leaf business. Recommendation: buy at $39.5, target $43, stop loss $38. I do not hold the above stock.